As presidential-elect Donald Trump makes more appointments to his cabinet, investors are starting to get a better understanding of what Trump 2.0 might look like. I caught up with Chris Andrews, the CEO of Trobe Financial, a little earlier, and he says while Trump's proposed tariffs are a risk, the Middle America segment of the US economy is a huge investment opportunity.
Markets are positive, and certainly at the moment we're seeing the equities market surge. We're seeing a cab ranking of deals coming. So certainly the market's initial impression is positive. But if you look longer term, I think really they're just looking at a really big ambit of uncertainty from here on in, which truth be told is the perennial in investment markets. So there's a lot of uncertainty as to how it plays out from here, Ed.
Yeah, one of the big uncertainty parts of it is the potential tariffs that the Trump administration might put onto the price of goods coming into the country. What could that mean for Aussie exporters, for example?
If you take the biggest claim, if you think of 40% or 60% tariffs, that would be ruinous for international trade and for the US and the Australian economy. But it's been said before, and I think truly, when President Trump speaks, the first thing he says, think of it as the opening salvo in a negotiation. So I think, like the Reserve Bank, we're just taking a very cautious, measured view. We'll see how things unfold over the next 12 months. And truthfully, we're not expecting any of those really big shocks.
Yeah, because this is Trump 2.0. Markets have seen what happened in the previous administration. He wanted to put tariffs on Aussie goods, sort of got an exemption for things like steel and copper and products like that. So I guess we'll find out what's going to happen.
Yeah, I've spoken to a lot of CEOs in the US and business leaders around the US over the last 3 or 4 weeks, and you keep hearing that back again and again, whether they were supportive of the Republicans or whether they were Democrats themselves personally. They all said, we've seen this before. We don't think it'll be a disaster. This will be business as usual for America.
Yeah, so what is the sort of the vibe like in the States amongst that sort of CEO level? Are they sort of cautiously optimistic about the future?
Cautiously optimistic, pragmatic. You know, the US political system has checks and balances everywhere. It's not like a president can come in and completely throw over the table and start again from page one. So there'll be change, make no mistake about it. And one observation is that Middle America, that constituency that Trump absolutely pulled for, that part of America has got both political parties now fair and square behind it. So, you know, for investors, if you want a piece of the next 4 years, probably the next 10 or 20 years to tell the truth, you're thinking about investing in Middle America.
Yeah, talk to me about the advantages for private credit in particular in that Middle America manufacturing space or whatever it might be.
Well, we've recently started a product in this Middle America space, Ed, because we saw this opportunity. Democrats, Republicans, it's absolutely bipartisan. And their sense is this move to globalisation, it really ripped the heart out of those middle states, the smaller to medium enterprises, factories, services, etc. It ripped the heart out of that part of America. And we've seen the problems. Both parties are now looking to fix that. And you have very big focus from all parts of government on rebuilding that. You know, for Australian investors, obviously you're looking at international exposure there. But you do need to think whether you would want to step out of and miss out on what is one of the really big investment thematics of probably the next 10 or 20 years.
Yeah, private credit's really expanded the last couple of decades into sort of multiple different asset classes. What's really been driving that?
Well, globally, we've had the banks gradually contracting their credit jaws, and that's been absolutely intended. That's been the push of regulatory action across the world since the global financial crisis in 2008. But you've still got great businesses who have a need for finance and who have need for really smart, really flexible, really adaptable capital providers who can provide them the capital to grow their businesses and invest in their own businesses. So where we are today, we're seeing a really great diversity of credit strategies. We're seeing some at the higher risk end. At Trobe Financial, our focus obviously is more on the more conservative end. That's consistent with what our investors are asking for us. But you're seeing a great diversity of approaches in a really wonderful asset class. And the fundamental proposition there is you're getting equity-like returns for fixed interest type risk, which we think is very attractive.
And what's the investor appetite in Australia like for things like that?
We've seen terrific take-up by our investors. There is real interest. I think, you know, fundamentally, investors are seeing the same thing that we are seeing. They're seeing the headlines. They've watched the political saga unfolding over the last 5 and 10 years in the US very carefully. They can see that both parties are circling around this middle American economy. It's the reshoring of factories. It's the reshoring of business. It's the potentially imposition of tariffs to accelerate that as well. All of that is focused on rebuilding middle America. When we talk to investors, we're not talking to them about anything they haven't been thinking about already. So I think there's a wonderful receptivity to this development in markets.
Chris Andrews, Chief Executive of Trobe Financial. Thanks for coming on the show.
Always great talking to you, Ed.